Investors consider a September rate cut by the Fed a done deal. The question is whether the Fed will deliver a 25 or 50 basis points rate reduction. Can this week's data, though, clear the air on that? And where does that leave the dollar? This is the week ahead. Thanks for joining us at exam.com. I'm Christina Marujos, and with me today is our lead investment analyst, Rafi Boyajian. Rafi, great to have you with me. Let's get right to it. Turning to the United States and looking at the data, we'll get US CPI and retail sales this week. What are we likely to see in the numbers, and what would that mean for Fed rate cut expectations and, of course, the dollar?
Well, Christina, indeed, the CPI data will be pretty important. However, it might not be quite as important as the previous ones because, in fact, right now, investors are feeling a bit more confident about where inflation is headed and not quite as confident about the overall economic growth in the United States. So if we were to get pretty much inline report this time around, it might not make a huge impact on the markets because a September rate cut is pretty much a done deal. So we are expecting the headline figure to have eased to 2.9% and core CPI to ease a little bit to 3.2%. So it looks like inflation is finally headed in the right direction. But of course, markets will be hugely sensitive to any shocks in those figures, whether to the upside or to the downside. Now, if we get an upside surprise, a big upside surprise, I think that would really make things worse in terms of the current market jitters in terms of a US recession, because it would make it more difficult for the Fed to cut rates aggressively. But on the other hand, should we get a big downside miss, I think that would really cheer markets, because it would mean the Fed will be able to potentially make big rate cuts this year, possibly even a 50 basis point rate cut in September. But on the whole, as I said, we might not see a huge reaction because the week after we've got the Jackson Hole Symposium, where Powell will make his big speech, probably making a proper dovish pivot and signal a rate cut in September, and investors will be wanting to see whether 50 basis point rate cut is on the table. But then when it comes to the retail sales data, which comes up a couple of days later, now the risks around that are asymmetric, because I think whether we get, the forecast is that we're going to get a rebound of 0.3% in retail sales in July, but whether we get an inline figure or an even stronger figure than that, I think either way the reaction will be positive, because with the inflation under control, I think investors, if we get a strong growth figure around consumption, I don't think that's going to dent rate cut expectations for September in any way, and at the same time it's going to allay fears of a slowing US economy. So the dollar, I think it's a little bit tricky to predict whether it's going to react more to the retail sales data or to the CPI data. On the whole, probably if there's no surprises in the CPI report, I think we should potentially see a bit of a rebound in the greenback as we see those recession fears recede further in the coming days.
We'll also be getting CPI data from the United Kingdom. We'll be looking at that and the pound, of course, in a bit. Before that, though, let's look at the only central bank meeting we have this upcoming week. The Reserve Bank of New Zealand meets on Wednesday, Rafi, amid expectations that it might make a rate cut. What is the likelihood of such a move, and how might the Kiwi perform?
Indeed, there's been quite a turnaround in terms of rate cut expectations for the RBNZ. It wasn't so long ago where the central bank was telling us don't expect any rate cuts until maybe the second quarter of 2025 at the earliest. So now we did, of course, see that the second quarter CPI report for this year, which did show us inflation falling to 3.3%. So that's only slightly above its 1 to 3% target range. After that, we had some jobs data, which was kind of mixed. It didn't really do anything to raise alarm bells about very strong rebound in the labor market. And also we did just get inflation expectations expectations numbers out of New Zealand, which were which fell to a 3-year low. So I think all of that has boosted expectations that we may even get a rate cut at this meeting in August. So markets are pricing in around 80% probability, but it's not a done deal. So if the RBNZ does stay on hold, we could potentially see positive reaction in the Kiwi on the back of that. But if they do go ahead and cut rates, the Kiwi might come under pressure. But I think if they do cut rates, the more important thing will be whether they're going to signal further rate cuts later this year.
I see. And now turning to the United Kingdom, we'll be getting a slew of data this upcoming week, with the spotlight, of course, falling on the inflation numbers. Do you think it will be a good week for sterling?
So sterling has been struggling a little bit because of those riots we've been seeing in the UK, which could potentially hit growth. For now they seem to be, dissipating those riots, but it will probably hurt GDP growth for the month of August. But overall, the UK economy has been outperforming many of its peers. Its growth in the first half of 2024 has come in a lot stronger than expected, but inflation has been falling, so that has allowed the BOE to start cutting rates. So if we do see a further lowly figure for the month of July, I think it's going to have to be below 2%, but that's probably not going to happen. I think the expectations are we might see a slight pickup in CPI in July, so probably that might push back, see investors pushing back expectations for back-to-back rate cut in September. Overall, though, there's still around 30% odds of a rate cut in September, so I think any surprises in data could really sway those expectations, and the pound would react accordingly. But of course, there's going to be other data. We've got to have the labor market data. In particular, in that report, the wage growth figures will be important, as well as, of course, retail sales numbers in terms of to see how well consumer spending is holding up. So overall, I think there's a decent chance that the pound will be able to make a bit better recovery in the coming days. But of course, it will be sensitive to any downside risks as well.
Rafi, thanks so much. This was The Week Ahead here at xan.com.